Welcome back. Now, before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, the total assets of Arab banks are expected to hit $3 trillion this year, up by more than 13% from the $2.6 trillion in 2012. That's according to the Secretary General of the Union of Arab Banks. The Secretary General, Wissam Fatou, was quoted as saying that the deposit base of Arab banks stood at $1.5 trillion, with a loan portfolio growing to $1.4 trillion. He added that the Arab banking sector is still safe from the euro crisis and also from the Cypriot banking crisis in particular, due to good risk management. UAE consumers have been forecast to spend 677 billion dirhams this year, up 4.1% in real terms over 2012, off the back of a recovering economy and the cost of living. According to Euromonitor International, representatives were quoted as saying that the fastest growth will come from the communications sector, with spending expected to hit 7.2% year-on-year in real terms this year, while spending on housing will grow by 4.2%. Experts stated that they expect this growth to be off the back of inflation, as basic commodities and living essentials will increase, not due to rising consumer incomes. It added that between 2013 and 2020, expenditure will grow by 34.1% in real terms, with the communications sector posting a 62.5% increase. Spend on health goods and medical services will increase by 41%, while hotels and catering will grow by 40.3%. Looking to the hospitality sector now, Starwood Hotels and Resorts have officially concluded a month-long immersion in Dubai. Marking the conclusion of their relocation, the president and CEO of Starwood Hotels and Resorts, Frit van Paschen, revealed today insights from the company's engagements in the Middle East. Throughout March, the CEO and members of Starwood's senior leadership team met with 3,000 associates, concluded 50 ownership meetings, and visited all 14 Starwood hotels in Dubai, which is the company's second largest market behind New York. Despite the region's political instabilities, senior representatives revealed that the group's key growth markets in the region are the UAE and Saudi Arabia, adding that the current 12,500 rooms that are currently operational throughout the Middle East will be increased by 2,000 rooms by the end of the year. The company also announced a comprehensive renovation strategy for its Le Méridien brand, for which Starwood and its ownership groups will invest $200 million in the renovations of 13 hotels and resorts in the MEA region over the next 3 years. The president and CEO of Starwood Hotels and Resorts believes that the time spent in Dubai will no doubt drive future hotel contracts in the region.
The reason to relocate is to get closer to the markets where we're operating. The fact of the matter is you're always going to understand a market better if you spend time there. And there's something different about a week-long business trip where you're on a whistle-stop tour and actually having time to buy groceries and walk around and see what's happening and see people on more than one occasion and get to know them a little bit better. Why Dubai specifically? Well, simply put, today, Dubai is the city in the world after New York with the most hotels for Starwood. But even more importantly, it's at a global crossroads, and it represents what we see as the continued development of high-end travel around the world, new travel patterns, the development of infrastructure, a recreation of luxury. So for us to be here and see that firsthand is critically important for a global company. Well, what's happening in markets around the world is, as we develop, we speak to owners and developers who have hotels that they're either operating independently or sometimes with other brands. And we talk to them about the strength of our loyalty program that generates about half of our occupancy, the strength of our global reservation and revenue management systems, and all of those things are ways to generate higher returns for either an existing or a new hotel. Because we're not in the business ourselves of owning hotels, we're in the business of creating great returns for hotel owners by bringing happy guests to their properties.
Meanwhile, the Senior Vice President and Regional Director for the Middle East, Guido de Wilde, believes that the driving factor into the growth of the country's hospitality sector is strongly related to the expansion of routes introduced by carriers such as Emirates Airline and Fly Dubai.
We see growth potential as we see the airlines grow. If you look at the network of Emirates Airlines, followed by Etihad, Qatar Airways, all of the airlines here in the region are growing. Not just Emirates here in Dubai, but also Fly Dubai, also expanding rapidly. We should not underestimate that. Also growing its network. So there are more and more people traveling through the region, and as more people travel through the region, there will be more people staying in the region. And so there is a need for more hotels. And I think there is a great momentum going on in general in this part of the world. There is growth in practically every country. So you also see tremendous growth in Qatar, and you see growth in other countries in the region. There are big events lined up. So if you look at Qatar 2022 World Cup, if Dubai gets the 2020 Expo, that's going to be another main driver of business into this destination. We see the dynamic in Saudi Arabia growing. We see increased travel into the holy cities Mecca and Medina. We see great potential for hotel development in Jeddah, in Riyadh, in the Eastern Province. So literally in all areas in this region there is great growth. The political situation, it's there, but at the same time you see positivism and optimism, and people look forward.